What's up, friends? It is market update time. We are going to go into the changing markets around the Denver metro and see how things continue to shift as we head into the winter season, I guess. This is November. I'm recording this early November, and this is the market update for the month of November. So we're going to see how things keep moving. We're also going to talk about the difference between a balanced market, a buyer's market, and a typical market. And those things all mean three different things. And they kind of get thrown around a lot and sometimes interchangeably. So I want to take you through what those all mean and which ones are applicable right now. The usual caveat, Sam Newman, Denver real estate professional. As much as I love doing these videos, I love helping you buy, sell houses, just accomplish your real estate goals. So reach out to me with questions. My information will be below as always. So what do we have here? I have the most recent report from our friend Megan Aller over at First American Title, #1 title rep in America. Not close. She is the best. And this first one shows a whole bunch of things. Megan does a great job of packing a whole lot of data into all of these graphs. And this really, I want you to look at the blue line, which if you followed these market reports before, you've seen shoot up drastically. This is the average daily active count. So this is our active inventory. Obviously, you're seeing it really hit a low point in January, February. I should learn. I'm still learning how to do all this stuff. January, February, it hit that kind of low point of, we were below 1,000 active units a lot of the time. And now we're over 7,000, not a lot of time, for a little bit. Now we're over 7,000 active units up here. And the interesting thing, too, on this right side, she has it broken down by months of inventory. So how many months would it take to sell all the houses if no new houses came on is essentially what that means. And what you see right now, we're sitting right at 2 months of active inventory. So, or 2 months supply of inventory. So basically what that means is a balanced market typically is right at 6 months supply. So we still have a ways to go between those two things, but that would make it exactly balanced between a buyer's and seller's market in theory. But a typical market, Megan actually went back and pulled the numbers from 2013 to 2019 when it was more a typical Denver market, and month supply hovered right around that 2 months from 2013 to 2019 on average. So really what we're seeing now is we're still not at a balanced market, but we are moving into more of a typical market from what we've seen the last decade. Obviously during COVID, things exploded, but now things are becoming more typical. Interest rates have skyrocketed, and that pushes buyer demand down. There's still a lot of people out looking for houses, so we are still not in a buyer's market. That's kind of the point I'm making here, is a lot of people will use that term. It is a buyer-friendly market. That's one I heard recently that I really, really enjoy. Buyers have opportunities, and in a lot of ways, buyers have the upper hand in a way they haven't in years. But still technically not a buyer's market, but we are in now to more of a typical market. Next one, this is odds of selling. This is basically taking all the properties, how many of them sold in a week, how many didn't. So the numbers get kind of squashed because there's so many in here. But this peaked above 80% back in the spring, and we're down to 45% as well. A typical odds of selling in that aforementioned period from 2013 to 2019 were around 49%. So we're actually a little bit below that, but what you're seeing is that stabilizing more into a place of normality. It's just becoming more normal, even though it feels like it's not normal because of how abnormal in the other way it has been for 2 years. Again, if you've been watching these, this is nothing new. We are seeing our average daily active count here in the blue and our active units for balance, that 6 month supply. We're still way off that. We're still way off balance. At this point, I'm wondering what a balanced market would look like. I mean, are we on the market for, I guess 6 months? Average, yes, but we'd be looking at some houses being on the market for a year and it not being a big deal. That would be interesting to me. I was going to say I'd like to see that. I don't know if I'd like to see that, but whatever. Market dynamics are what they are. For me, I don't worry about it because people are always going to need something done. They're going to need a job done. And so some people will freak out. Oh, the market's changing. It's not how it used to be. I actually have to do my job now as a real estate professional, XYZ. It doesn't matter. You don't get to decide what the market does. And where we're at in a more typical market now, it's really good for everybody because sellers still have a strong buyer pool out there if and when they want to sell, and buyers have opportunities. It's kind of the best of both worlds. Interest rates, not great. Hopefully the thing right now with interest rates, everybody's like, it is a big stressor on your monthly payment when interest rates are up at 7%, because we're paying $500 to $1,000, maybe more a month from when they were at their lows, depending on the property. Now, I can get you an interest rate buy down paid for by the seller, not on any property, but the majority of properties on the market right now. So if there's a property on the market that you like, say we're going to go at an asking price, which is a win for a seller right now, but we say, hey, we want $10,000 to $15,000 in seller concessions to temporarily, let's say, buy down an interest rate. You can do some permanent buy downs too. That gets into the weeds. Chances are they're going to say yes. Not for sure, but chances are we see it happen. We're seeing it happen all the time. So there are ways to get around those interest rate things, at least in the short term. In short term, I mean 2 to 3 years, where if interest rates drop in that point, you just refi anyway. So it is really a good time for buyers. And if you're thinking about buying and the interest rate thing is scaring you, call me and we'll figure it out, because buyers are winning a lot and they're not always having to pay that 7% mark. We are seeing here a number of showings per property. We're at 1.5 per week. That was unheard of in the spring, where we peaked around 25. Things have just slowed considerably, and people need to and are adjusting their expectations accordingly. If I can move me, here we go. Median days on market for all price ranges, it's been around 20. The last few of these reports that came out, it's right around 21. It is not uncommon for homes to be on for a month. That actually seems pretty normal now. And this is the price reductions for pending transactions of all the properties that went pending. How many of them had at least one price reduction? 49.9%. Half of them dropped the price. It's a different world out there. That's it. This is and thing is a quote from Megan right here, where she was talking about the 2013 to 2019 typical market, around 2 months of inventory. This second paragraph, this is something that, not necessarily for now, but this is something we'll want to keep our eyes on. Not the best circle, Sam. We're waiting for the purge of active inventory. So basically, generally in the fall, kind of in September, a lot of the active inventory will be purged. It'll be withdrawn. It will expire, whatever. And then that will create, obviously, less inventory. And that lower amount of inventory will spring the coming selling season. So, fuel the spring selling season. So when it comes to spring, inventory is lower, houses start going on the market, but then buyers start going out there. That's when that selling season really gets going. That has not happened yet. We have more active inventory than we normally would heading into Q4, probably because of just how volatile the market's been, how big a lack of inventory there was for a long time. And now this sort of rebounding, and things haven't quite equalized and stabilized yet, but it will be interesting to keep an eye on to see if we're still seeing inventory high, and that could make this coming spring more of a buyer-friendly market as well. But something to keep an eye on. We will see what happens. That's it. Don't want to waste your time, but that's what's going on in Denver real estate. Like I said, if you have any questions, please do reach out. I'm here for you. I want to thank you for watching, and I love you as always.